Let's talk to Bill Blain. He's a strategist at Mint Partners. Happy Easter to you, young Bill.
Good morning.
Right, soapbox time. The world. Let's kick off with the fangs.
Well,
Technology, not my favourite subject, going up like a homesick angel, but it seems to have changed.
suddenly Lucifer is pulling it back downwards towards Earth. We've got a very interesting situation developing. The big thing that we all know about markets is that when something expected goes wrong, the market overreacts, but then very quickly recovers.
Yep.
So you see everyone saying to us earlier this year, stocks are getting too high, we're going to have a correction. Stocks correct. Very quickly people say buying opportunity, they jump back in,
Yep.
and everything keeps going up. What surprises market and when you get the big collapses is when we have what we technically call a no-see-em. And a no-see-em is something that comes out of the left and just goes slap, completely catches you by surprise. And I think we've just had one of these, something that we didn't expect and didn't understand, and we're only now beginning to understand how it's infecting
But doesn't
the
that
whole
happen at market tops, that we never know the reason, okay, where the fundamentals invariably look at their best?
Yes.
And the markets pull back, and then after the event, we try and work out what happened.
Absolutely correct. And at the moment, the macro fundamentals of global synchronized growth, normalizing economic policy and normalizing interest rates, that all points to very strong markets. We don't need to worry about interest rates particularly because they're still very low. They are going to go up slowly. But what we've suddenly got is a catalyst to make people question what they're saying. And that catalyst was the Facebook saga. When we suddenly realized, hang on, this is why Facebook's making so much money. This is what Facebook's been doing, all our personal data. And it made us start to question other stuff. And it's after you have the initial catalyst, the contagion then just shoots like wildfire right across the whole market. And we've got really a couple of things going on just now. The first is the risk that we're suddenly going to see the same kind of regulatory overkill in the social media data sphere that we saw destroy the financial services market over the last 10 years. Remember, financial services used to be a massive part of the global stock market. They've now tumbled in their size, mainly because regulation has made them far less attractive to investors. We're going to see exactly the same thing happen with the people who are using big data, and that's Facebook, that's Google, Alphabet, that's people like Apple, people like Microsoft, anyone who's using big data. But it's also causing people to question the fundamentals about some of the market darlings. And of course, the one that everyone has been thinking about is Tesla. Now, there are many reasons to be worried about Tesla. It's hemorrhaging money, it's not making cars, and the response to that is Tesla is not a car company, it's something bigger and magical and pixie dust and unicorns riding round it everywhere. It's really something quite different, all because of Elon Musk. But now suddenly it's like we've had this weight lifted from our eyes, and we're saying, hang on, the company is 10 billion of debt. It needs another 2 billion to make it through this year. It's getting nowhere close to its planned deliveries. I think it will hit 2,500 cars a week sometime in the next 2 months, but it's still massively short of that target. It has, over the last 7 years, sold something like 250,000 cars. But people are now beginning to question, can a company that sells 250,000 cars really be valued at 4 times Ford, which sells 12 million cars a year? So suddenly everything's coming back.
Well, the data I've looked at on the comparisons is comical.
It is.
In the sense that, Sam Corkwell, the great bear trader, his blogs for as long as I can remember, has been saying you should be short this situation.
Yes, but we weren't listening to him because he didn't understand the modern reality of just how magical the pixie dust that Elon Musk was sprinkling all across all his ventures really was. Suddenly we're waking up and going, hang on, Tesla is just a car company. Okay, it makes a very aspirational brand. You know, it's got everything. Like it's a good-looking car, so it's a brand you can buy into. It's electric, therefore it's much better. It must definitionally be. The fact that the petrol engine's still far more efficient, people tend to forget about. It does kind of remind me about Volvo. You know, when you and I were young, everyone wanted a Volvo, and we used to say when we run out of space on the planet's roads, we'll just cut the bumpers off Volvos to make space.
Well, I actually wanted a Saab aeroplane.
Yeah, okay, well, there you go. Volvo's today just another car brand. I suspect that's what we're going to find out about Tesla. And of course, there's so much else going on within Tesla. Corporate governance has been extremely poor. They've been investing in things that seem to have no relevance, such as bailing out his cousin's solar panel business. We've also had the departure of many key staff on the production and the finance side, which tells you we've still got production problems, and the finance team are worried about where the money is going to come from in future. So many negatives. And this has the potential to contage the whole stock market. When one market darling goes round and people find that they've suddenly been swimming without their trunks on, they're going to figure out, well, what else is trading at ridiculous levels? And all you really need to do is take a look at the rest of that whole tech sector to find companies that look to be massively overvalued by the way we used to look at stocks. Of course, we're all so much brighter now, and we understand that these old styles of valuations aren't relevant. But hang on, they're only not relevant until they are relevant, and suddenly they're becoming very relevant again. So this is one of the reasons I'm going very negative at the moment on the prospect for global stocks. Now, long term, we said right at the beginning that global fundamentals are looking very strong. But with the kind of wake up and smell the coffee moment that we're getting in the tech sector, I think it's very likely we're going to see some kind of correction in this coming quarter, maybe down another 5%, maybe even 10%, at which point it's definitely put your biggest buying boots on and start buying fundamental value. At the moment, tech stocks are about 14% of the US stock market. I suspect we'll see their capitalizations fall quite dramatically, but there are other areas to look at. There is a real economy out there.
After all. On that note, Bill, happy Easter to you and your family.
Happy Easter.
And we'll see you in 2 weeks' time. That's Bill Blain, strategist from Mint Partners.